Clause number 30 under Form 3CD. So this is applicable to Saukar. Who is Saukar, sir? Saukar means somebody who gives loan, or sometimes people who have received the loan, borrowers also it is covered there. So they have borrowed the loan or repaid the loan otherwise than through account pay check. Account pay check means technically we wanted to capture the cash, because in industry you might have heard that people are still giving loan and receiving the loan in cash, and that interest rate sometimes it goes from 3% per month. 3% per month, it is the lowest interest rate that you can expect. On an average they charge 5% per month. Okay, and there are people who are even charging 10% per month. 10% per month is 120% per annum. So that kind of interest is given because this loan is given in the cash without any mortgage, without any agreement, just a reference only by name. So in Hindi, in Maharashtra, they call it market se paisa liya hai. Market se paisa liya hai, or you have borrowed money from the market, meaning thereby you have taken the loan on hundi. That means some written agreement, some one paper agreement, which is not even notarized, if it not even registered. And if you have taken the loan and repaid the loan otherwise than account pay check, or otherwise than this banking system which we have now, that means it is on cross check basis or it is on cash basis. Technically it is on cash basis. Then the reporting under section 69D has to happen. Now there are so many sections under the series of section 69D. There is a section 69, 69A, 69B, 69C, and then 69D. Obviously here we are talking about 69D, the details of any amount borrowed on hundi or any other due, any amount due from therefrom, including interest, repaid otherwise than through account pay check. Either you have borrowed or you are repaying. In both the cases, the person who is borrowing and repaying is the defaulter, and if that is your assessee, he has to record it here. Now if you have done this or any of the transaction here, which is this particular transaction is anti black money transactions. We call it anti black money. If you are holding black money, if you are having a black money, either you will spend black money. So to this 60 for that transaction 69C will be applicable. You have incurred expenditures, but you are not able to explain where you have incurred. You have gone through the foreign tour, and government is now know the data of the foreign tour. You have purchased certain electronics or appliances in your home, and you are not able to justify from where you have brought that particular money, or some inquiry has happened, and in the inquiry or voluntarily you have gone and shown you are having undisclosed investment, you are having undisclosed asset, you are having undisclosed money with you. So all these sections will be applicable, and here the tax rate is given under section 115 BBE. The tax rate is given under section 115 BBE, and you should not be surprised to know that the rate of tax under section 115 BBE is flat 60%. Flat 60% is the tax rate. No basic exemption limit, no deduction, nothing. Flat 60% tax rate, my dear friend. Then you will be happy only sir 60%. No, it's not only 60%. Then plus 25% surcharge on the tax amount. Surcharge is not applicable on the income, it is on the tax amount. So 25% surcharge and 4% cess if you apply, effectively it becomes 78% tax rate. So if tomorrow government is finding you in this default with 100 crore, out of 100 crore, 78 crore will be the tax amount, and because you have done the transaction of this nature, there will be penalty for you, and that is penalty is 10% of the tax amount. So additional 10% will be taken. Definitely some interest application will be there, and jail is also there, imprisonment is also there from 6 months to 7 years. So depending upon the volume of default, the nature of default, government is going to take very strict action against the assessee who is doing this transaction. Obviously nobody is going to tell you that they have done this transaction. It is done in the cash. It is still being done at a very high scale, but nobody is doing the reporting under clause number 30. Being an auditor, if tomorrow any of this particular transaction comes out, even you will be responsible to some extent. But yes, definitely the moment you have identified, it is your responsibility to report under 69D by intimating your client that You are gone now, because I am reporting. That means you have to report under ITR, and this is the consequence that is going to happen. So this is a threatening provision. It is not a comforting provision or a taxing provisioning. It is literally a threat. Don't do this or you are gone for a very at a very high cost. This is the government intention under clause number 30. Thank you.